Hello, and welcome to our latest video chat in the Money Show expert interview series. I'm Mike Larson, editor-in-chief at Money Show, and today I have the pleasure of speaking with Dan Gramza, president of Gramza Capital Management. Dan, thanks for taking some time out to chat today.
It's my pleasure to be with you, Mike.
Great. Dan, I know you've been a trader, a consultant, a financial markets educator for many, many years. So I guess I'd start this interview by asking you a little bit about this market environment. How do you think it compares to others that you've seen in the past? Is it more or less challenging to trade? I'd be interested in your perspective on that.
That's a very interesting question. Excuse me. I think it's what we've seen many times in the past. If you look at the stock market, if you look at how it's behaved, I feel it's somewhat orderly, actually. And I feel the same way about the currencies, interest rates, metals, energy, ags, all those complexes are always responding to what's happening out there.
Hmm.
And in that regard, I don't see a dramatic change from the past. I still think there's opportunities there. It just depends on your patience level and your techniques that you use to try to participate in those markets.
Gotcha. What kind of questions are you getting from clients or students these days? I mean, what are some of the most pressing concerns that the people you speak with are bringing to the table these days?
In terms of markets or
Yeah,
terms of trading?
in terms of markets
Markets?
and trading, frankly.
Okay. Well, in terms of markets, it kind of goes across the board because I deal with people in different areas of those segments that I just mentioned. I think the feeling is most dominant is how do we digest all this stuff that's out there right now? I mean, gosh, the news, the political situations, the geopolitical situations are tremendous. Plus the fundamentals that seem to be driving the market, but yet sometimes they don't behave as we expect those to behave. And, it seems out of kilter in that regard. My feeling is first, I think fundamentals are important. I think they reflect the or give an excuse to how people want to respond to a market. So we see a certain number or we see a certain action or a certain political action that may be happening in some part of the world. Okay, we expect the dollar to do this. We expect these other markets to do this. So we have that expectation. The other side of that is how the market absorbs it. So from my point of view, I think fundamentals are important. I think it's something personally I want to get a handle on. Not that I can figure it all out, but get a feeling for what's typical, what's not typical.
Sure.
Then the other part is how does the market absorb it? And price determines that. So from a trading point of view, um, my focus is on bottom line, how price behaves. So what I really look at is not just my belief what it should do, but what is it doing? So in other words, if I'm bearish on crude oil and I think it should be going lower, maybe because of fundamentals,
Hmm.
because of supply and demand that's out there. But if prices are going up, I don't make money by trying to sell into that rally. I don't use that kind of approach. I feel that if the price is going higher, even though I think it shouldn't, my opportunity is to go with that flow.
Got it.
And what are the clues that you and I could look at to help us make that decision that it looks like, we should be buying this, not selling it at this point, even though down the road it could change. I just thought of something as a side note, but it was here in Chicago. It was at a bank.
Hmm.
I guess I shouldn't say the bank, but anyways, here in Chicago, and it was for the currency trading desk at the bank. I was doing a course on technical analysis. And I remember a woman sitting in front of me in the very first row. And before I started, she said, I'm only in here because Bob is her boss, Bob made me come in here. I don't believe in what you're going to talk about. I'm a fundamentalist, and if I'm correct on fundamentals, I will make money for the bank.
Hmm.
And she's absolutely correct. the challenge could be between that point of view and when the market absorbs it, right? So if you have a big chunk of money, like at the bank, and you can say, I can absorb this move against me for 6 weeks. So eventually, could she be correct? Yes. But in between her point of view and the market actually doing what she thought it could do, that can be a lot of exposure, a tremendous amount of exposure on an individual basis. And so that's why I think it's important to have that fundamental point of view, but from a trading point of view, my final ticker is what is price doing? Does it agree with what I'm thinking or does it not agree? And if it doesn't, maybe I don't do anything. Or on the other hand, you and I say, this is fighting the fundamentals that we're seeing out there. So if I'm going to buy it, then maybe I have a tighter risk parameter because of that. I'm fading the fundamentals. So how we adjust our trading approach, I think is a function of how those pieces kind of fit together.
Great. Thank you, Dan. That's great perspective there. And we have a couple minutes to talk about some of the markets out there. I'm kind of curious, starting with stocks, what you're seeing, in your charts and your analysis about the market overall at this point.
Well, what if we think about our current environment, like today, what we're seeing is the debt ceiling dance that's going on in Washington. Not surprising, to be expected. Both parties have to try to keep face in a sense. They're both trying to show, hey, look what I did. Look how I held off or how I got this or whatever. That's going to continue.
Yeah.
It's not going to change until we're close to that deadline. And at the deadline, they could say, as they've done in the past, okay, let's just kick the can down a few months and we'll readdress this. That's one approach. Or maybe they actually will come to an agreement. The idea of us going into default, I think, is fairly remote. No one wants that, no matter
Yeah.
what party you're in. So the dance is going to continue. Now, let's talk about the markets. You asked me about that. The stock market is weak. It's soft right now because of our economy, because of supply demand for certain things. No, it's the uncertainty of the Fed situation right now and what's happening with Washington, D.C. So it's a situation that is not unusual. And what we've seen in the past when you and I have looked at the market is the markets hate uncertainty. And that's the environment we're in. Am I bearish on the markets? No.
Um,
No, longer term, I still feel there's plenty potential here to the
Gotcha.
upside. But
Okay.
right now it's soft.
Got it. Now, you also touched on energy earlier, which was a topic I figured I'd bring up. I mean, the Saudis are making some noises about potential production cuts here. You're going to be covering energy in a panel at our symposium in August. So I'm curious as to your outlook. Again, what are you seeing there, and what are your expectations for the next few months in the oil market?
I think first, fundamentally, well, you're right. There's some issues out there. What do Saudi and the other OPEC countries want? They want crude oil around $80 to $100 a barrel. That's what they want. So how do they get that? Well, a couple things, tools in a sense that they can have pressure on. One, production cuts that you just said, cut down the supply. And if that demand stays or rises, we're going to see prices going up. Another factor that, Mike, isn't usually looked at is the US dollar. The US, crude oil is priced in US dollars,
Yep.
right? So if I'm an oil producing country, I get US dollars when I take payment. Although some countries are trying to change that, like China and Russia. But I get those US dollars, I go to my bank and I sell the US dollars to get my local currency. The stronger the US dollar is, I get more of my currency. So it's to my advantage. So right now we're seeing the US dollar getting stronger. As I'm talking about today now,
Yeah.
we're seeing it getting stronger. Excuse me. And we're seeing crude oil prices somewhat soft. So I think it's important to keep in mind the currency impact when it comes to energy. The other issue is the forecast that we're seeing. Right now, we're looking at warmer weather coming up. That has an impact. We have the driving season coming up. That can add some demand there. We have the political aspect of where does renewables fit in from just a political point of view.
Sure.
And if I'm an oil company, do I want to expand my operation? Do I want to drill more? We're seeing the rig count right now coming down for drilling rigs, which implies maybe they are holding off a bit. So there's a number of factors that I find incredibly exciting that surround this very volatile and so essential market. And so, from my point of view, you asked me about the next few months. I'd expect, or at least I would think, that over the next few months, we would stay in a sideways move. In other words, between 64 and well, close to 80, $78 a barrel. That's fairly valued based upon how crude oil has been trading. It may not be what, Middle East wants, what OPEC wants, but it's kind of the reality of where we are supply-wise and demand-wise for that market.
Gotcha. Yeah, and I guess I'd wrap up by just asking you. I know it's sometimes hard, especially if your specialty is technical analysis and following market signals, to talk too far in advance. But I'm wondering if you could give a sneak peek at what you think you'll be talking about or discussing in Las Vegas this August.
I I wish we were doing it right now, to be honest with you, Mark, because there's so many things that I find fascinating. Do you want me to talk about my presentation, that part, Mike?
Yeah, just a sneak
Oh,
peek as to what
yeah.
kind of nuggets of wisdom I
Well,
guess you plan on passing on.
well, I'm not sure about the wisdom part, but I do have some ideas. And that is when it comes to the Fed, the Fed's trying to do its job. And I think we have three tools that the Fed can do. And right now they're using discount rate, but there's other tools that I'd like to talk about to give people an insight. If you ever hear of the Fed doing this or this, here's why. They buy or sell securities. What does that mean? Who does that with the Fed? And there's 22 dealers that can deal directly with the Fed. So first, the Fed in terms of its function, how does it work? What can you and I look at to give us clues about what's going on with there? And then where are we in the economy? And does the Fed policy and the economy match up? Where does the retail uh, consumer fit in? The retail consumption, 70% of our GDP.
Hmm.
It's a big deal, right? So you and I would want to look at where are they and what tools can we look at to give us a feel for our economy and where that key component is in our economy. And then the other part of it is just how is the market absorbing our current situation? And what I'd like to do then, wish we were doing it now, is to look at the current markets, to look at stock indexes, currencies, interest rates, metals, energy, agricultural markets, because what we're talking about affects all of them when it comes to the Fed policy. And what is the Fed policy? How should we interpret what they're doing? Is it too much too fast? Is it right on target? What are clues that you and I can use to monitor that speed and velocity of Fed action? And then how is it impacting our markets? And then what do we see going forward then? If it's doing this now and the fundamentals are here now, what does that imply about going to the end of the year, for example? And so I that's what I would like to do. And I got to tell you, I'm so excited about doing that. It's, ever since you invited me, I've been thinking about that, and I thought, gosh, what a good presentation that you kind of gave that description, which was perfect. And I'm really excited. I'm looking forward to being with everyone there.
Great. Dan, thank you so much for your insights. And thank you everyone who's watching here. You're going to have a chance to get more of Dan's outlook, touch on many of the topics that he just brought up at the Investment Master Symposium. It's scheduled for the Paris, Las Vegas from August 8th to August 10th. So if you'd like to learn more, just click the link in the video description below and you'll find out how you can join us. Dan, again, thank you so much for your time.
My pleasure. Great to be with you, Mike. Look forward to seeing you in Las Vegas.
Take care.